Portfolio Builder members, welcome to our Monday Trade Alert. We had a very large profit, and I want to start off by saying these results are not typical by any stretch. And actually, our goal over the long term is to deliver about 1/10 of the returns we made this weekend. So with that said, we have been overperforming, and we're not going to complain about making more than we expect, but I just want to make it very clear, generating a $2.72 profit with protection to make this trade essentially atomic bomb proof is rare, and I don't want readers to think this is normal results. So let's look at what happened over the weekend, how we generated this large profit, what our expectations are for the coming weeks, and how all of the pieces of the puzzle fit together. Also, let's take a look at what could derail our plans and cause pain for investors. So I'm going to go back to the trade alert from Friday for folks who did follow it. What I won't do on the live stream is reveal the current trade alert. And this is how we protect our content. And of course, if you are currently on a free trial or an expired trial and you're watching this video now, you might want to consider calling Dean so you can gain access to all the trades real time. Instead of seeing the results after the fact in these live videos, you might want to get them real time so you can enjoy the results yourself. So call Dean 505-322-7515. Here's the most recent trade that was issued on Friday. And we said, we were just making fun of Trump saying, I think his new saying is keep America great. And it was make America great. So we used the line make income great again. And we'll look at why we were so bullish on the SPY after playing it to the downside since his latest tariff fiasco, and why we went bullish to generate a big profit. So we took a hit of 30 cents a share from Wednesday to Friday last week because the trend of the stock market at that time had been downward. And this was what we predicted would happen after he came out with that Trump tweet. So we were making money all the way down, expecting at some point a rebound. And we'll look at some of the critical news that came out. I wanted to be bullish as of Wednesday, but the market was still very weak Wednesday, and we continued to play the trend. Now, it's always nice to buy the dip and make a bunch of money, but what's not nice is to buy the dip and it's not the bottom of the dip. So our strategy will typically follow the trend until it's dramatically changed, and it's during these transitions where we might lose a little bit. So in this example, going from Wednesday to Friday, even though we had made a nice profit of 59 cents on the Wednesday trade and 51 cents on Monday for a total profit of 59 cents on the week, when the trend did change finally on Friday, we took a small loss of 30 cents. So here was our trade going into Friday. We sold to open the 291.50 call option, and we bought the 285 put. So this is important. Even though we're giving up some of the potential profit on the SPY, we don't want to ride it naked. Our clients are more interested in safe, consistent income with absolute protection at all times. And that's how we can make this strategy so passive. We can allow our followers to only take the trades on Monday, Wednesday, Friday, right at noon, and not have to worry about what may happen in between those times. What it does is it creates a maximum risk and a maximum profit in every trading period. So the most we could make on this trade was $2.87 per share of SPY, and the most we could lose no matter what. We could have an atomic bomb go off, the stock market crash 50% overnight. It wouldn't matter because we always own a put option. And that's what makes this program so popular, is that we can generate income safely with America's most important security, the SPY ETF. And we can take advantage of 3 option expirations a week to do so. So this was our setup. It's called an option caller. It kind of just reins in the potential profit or loss on your asset. And so we were able to generate profits for about 2 weeks on the downside and then flip the trade to expect a big rally over the weekend. And I'll talk about why I think stocks are going to float well above 300 on the SPY in no time until the next set of disruptions hits the market. So that's why we were bullish. Let's see how this trade panned out for us. So here was the chart as of Friday when we flipped the trade from betting down on the SPY to up. So here's what happened all in all to generate a very large profit that's not typical, not normal by any stretch, and generated a great profit for our members. We went from 288.40 on the SPY to 292.62 for a gain, sorry about the double four, of $4.22. Now we gave up some of our profits with a smile on our face because we only had to give up $1.50. And what's important about that is it's just as likely the SPY could have traded flat or down over the same time of period. And so that's why we were able to finance the downside protection with a very far out of the money call option. So it was a very loose collar. Today we're slightly tightening the collar, and the higher the SPY goes, the tighter that collar is going to get. So right now we're expecting big moves to the upside on SPY, and we almost got our max profit. We got $2.72 of profit per share. So all you got to do is track when did you enter this trade. That was at 288.40, and I'll show you. Here's us entering the trade. So we had to have 100 shares of the SPY, step one. We had to make a note, not of what we originally paid for the SPY, but when we entered the option collar, you want to write down on your piece of paper, what did I see the ticker trade at, the last price for the SPY? In this case, it was 288.40. And then we're going to sell to open the 291.50 call. This was last Friday, remember? And we collected a 26-cent credit. Now to get out of that, we're going to have to pay a debit. And so in this trade, we're hoping the SPY would travel up, but we're going to get cut off on our maximum profit right around when it hits 291.50. And by some magic luck today, we're above 291.50, so we hit our maximum profit. On the other side of the trade, we bought the 285 put. So we were short the call and we were long the put, which kind of sounds funny because usually you would think of being short having to do with put options. But in this case, we sold the call. So we're short the call for a credit of 26 cents. And we were long the put for a debit of 48 cents. So in this trade, we actually paid a debit to buy our caller instead of receiving a credit. And that was perfectly fine. So we go back to today's trade results. We close out the position. Here's how we get out. Now in this case, the put option lost all of its value. You can't sell a put option when it's only worth a penny. Nobody wants to buy it. We're nowhere near the 285 price because as you can see, as of closing the position, we're trading at 292.62. We actually shot above what I thought the highest possible price of the SPY would be today, or at least what I thought would be worth for us to sell a call to get enough money out of the market to pay for the put option. So in closing our previous trade, we don't need to sell the put option. We only need to buy back the call option contract. So we have to buy to close the August 19, 2019 291.50 call option. Now again, because this is a live stream and we can't allow people who are just on a free trial or rather an expired trial to steal our trade alerts, I can't reveal today's new trade alert. If you didn't get it, it's because you're expired. So you need to call Dean, upgrade your membership, and you'll have the trade alert in text message and email every morning at noon Eastern, Monday, Wednesday, Friday. So again, that's 505-322-7515. We can upgrade your free trial that is expired and get you rolling with the current trades. Okay, so that's a wrap on what we did from Friday through today. I do want to take a quick look at our track record, look at a few of the past trade alerts over the last several weeks. I just want to show you how we did generate profits in a down move in the stock market, and now why we're bullish. We'll jump into the news as to why we think the SPY can climb back to that 300 to 320 range, which will be hard to predict the actual top because there's a few events coming up that are probably going to give us another nice sell-off, which again we will play to the downside and then buy the dip up. So let's just take a look at the track record and then we'll go into some of that. Okay, so I'm going to start off on the summary tab. Now this can be a little confusing to people, so I don't want you to feel overwhelmed when you see all this data. For folks who just start following our program, our goal is to really impress you right away with winning trade alerts. And that's what we deliver Monday, Wednesday, Friday at noon Eastern, trading the SPY. And so far its total return is 10.3%, which is good. It's our goal to generate a 1% return per month safely with very little risk of losing money. And essentially we do this by just simply following the trend of the SPY and protecting the position with the caller. So we're selling a call option to generate consistent income 3 times a week, and then we're buying downside protection by buying put options. And so what it does is it limits our potential profit, but it also limits our maximum loss. And that's what makes this program so popular and so safe to follow, as well as passive. You'll never touch the positions outside of those trading periods. And so Portfolio 1 certainly takes the most work because it trades 3 times a week. Now, equities are not the whole enchilada in terms of what we recommend investors do with a large portfolio. And as you can see, it's only 40% of my total assets in the model portfolio. We like to diversify the total assets to hold bonds and gold, as well as a small position in cryptocurrencies. And later in the presentation, I'll talk about why I think the central banks are going to be pushing rates lower and lower as long as this trade war lingers on. And also why I think the central banks are about to start printing more money than we've ever seen in history. And we've just seen the most money printing in history in the last decade. But I'm expecting it to actually accelerate as this trade war continues to ramp up. Now we have a little bit of a breathing room from September 1st. A small batch of tariffs are going to hit. December 15, a huge batch of tariffs are going to hit. And this is really a critical 3 months where it's either going to have shit hitting the fan or it may just de-escalate until after the election. So depending on how that plays out, we may start recommending a little bit more of a position in the gold market, which is the best way to profit from absolute insanity in terms of central banks printing too much money. And just in the last several weeks, it's important to point out we went from 15 trillion in negative bonds, sovereign bonds, to 17 trillion. So they are printing money at a faster pace right now than ever in history. And that's why we're in the big bubble of everything. And that's why we're bullish on stocks right now, with a caveat that the trade war news is going to send that up and down and make it a little more active, which is great when you trade it 3 times a week. So again, if you are only following the SPY right now because you only have a basic membership, or you're on a expired list, the second you upgrade, there's a free bonus where you do get our Tuesday trade alert, where we're playing the precious metals, and then our Thursday trade alert, where we're playing the bond market. And when you allocate your capital to have 40% in equities, 40% in bonds, and then having 10% in gold, plus another 10% in cash, some dry powder, you're going to see it makes it very hard for you to lose money. And when I look at our total return, when you combine the strategies, it's pretty impressive. When you combine all the strategies together, you get a 1% return in December, 2% in January, 1% in February, 2.7% in March, April 1.2, May 2.23. Our only losing month to date, July, -1, and so far in August we're up 1.37. Now the program most people get started with just had a big jump up in return. It was sitting in the 9% range. Last week we finally got over that 10% return, and considering we're trying to make 1% a month, we're barely beating that target by about 1.25. So it's doing exactly what it's designed to do, and I just want to make sure everyone knows that generating profits like this is not normal, and it's because we just had a big sell-off. We know what's about to happen with the Fed, and so we can predict the SPY is going to fly up but still have the protection just in case something bad happens. Okay, so that's a review of the current trade results from Friday to Monday, how it all fits together. I'm going to take a look at some of our most recent trades so we can see how well this system does when the SPY ETF is actually traveling to the downside. Okay, so the trade alerts I have up are the 14th, the 12th, the 9th, the 7th, the 5th, the 31st. Let's see when the SPY actually started to sell off. So I'm pulling up that chart. So we'll just look at the results from the end of July to about present, because that's when we had a big sell-off, and that's what I wanted to showcase, is how well this can protect to the downside, because that's a big fear for a lot of folks. Okay, so before the sell-off had occurred, we were expecting the Fed to lower rates and to become more and more accommodative, which we still believe is going to happen. And then we had the surprise tweet come out right after that, and he said he's going to raise tariffs, which made us believe stocks would quickly have some downside because of this fear of escalating the trade war. So we can see going into this trade, we ended up with a 12-cent loss per share on the July 31st trade alert. And we entered into this trade setup, which was still bullish at the time. This was before the threat of the tariffs had happened, and we had a setup where we could lose up to $500 and make a maximum profit of $300. So let's see what happened. And as of putting this trade on, the SPY was trading at 301.10. Okay, now the next trade we need to look at is the August 2nd. Okay, so here's the new trade alert, and this is when the market began to change direction quickly, and you can see we hit our maximum loss. So when the market changes direction unexpectedly, that's when we do have short-term losses. Now, I do want to point out that when that tariff tweet came out, the SPY actually lost $10. So everybody was just holding the SPY or stocks, they lost a lot of money. And because we were at least having some protection, even though we thought the market was going to travel higher, we were able to reduce those losses by 49%. And we were able to immediately flip the trade over and then start printing profits to the downside. So now you can see all of a sudden the risk-reward ratio makes money if the SPY travels lower. So in this case, we sold an in-the-money call and we bought an in-the-money put. And so this had a potential to make a $1.29 profit or a loss of 70 cents. So let's see what happened on the next trade. Sure enough, the SPY continued to lose value. We call them bag holders. If you were a bag holder during that period, your SPY lost $4.86. And because we had the upside down collar, which is how I describe it, it's an in-the-money call that we sell and an in-the-money put we buy, we made $1.32 a share. Okay? And that's with the setup where we couldn't win a whole lot, but we couldn't lose a whole lot. We were risking 70 cents to make $1.30. And if you notice, if we bet up, we have to take on more risk than we can make. If we're ever betting down, the odds really go on our side to have higher profit and less risk. So we love to bet down. It's just very rare that we would think that would happen. So let's see what the next trade setup was. We had another bet on the downside that was actually a little more aggressive. We added in an extra put that would allow us to make a little extra profit if we got a big sell-off. On this trade, we didn't get as big of a sell-off as we needed. Bag holders on the SPY, they lost $1.34. It was enough for us to make a 10-cent profit. So not getting rich with this trade, but everyone else is losing, and we're starting to make back the profits when the trend had changed. Okay, the next trade setup continued to bet down. This trade could make a potential profit of $1.06 and risked 94 cents. Let's see how it played out. And this trade, the SPY had jumped up a little bit and we lost 59 cents. Overall that week we were up 81 cents and we continued to play the downside. So the new trade for the next period was another downward bet. The market was still starting to go lower and lower. The trend had not changed. We had $1.20 to gain and 80 cents to lose. And on that trade we made 51 cents. So SPY went down, we made a profit. The SPY lost 91 cents if you're a bag holder, and our option caller generated a profit of $1.46, so we walked away with a 51-cent profit. The trend still had not continued. We put one more bet to the downside, and you can see we were potentially making $1 and risking only 43 cents. And we can see that the SPY lost investors $3, $2.99. But for us, we took in $1.61 credit when we entered the collar. And we got another $1.97 when we exited the collar for a profit of $3.58. So when you combine the two, that's a net profit of 59 cents. And we did one more down bet, which lost 30 cents on Friday, only to turn around and pull off a huge profit of $2.72 today. So that gives you a feel for how we react to downturns and why our program actually invites volatility. We really don't mind it. And that's actually where a lot of people realize our product is so much better than what they're doing. Because most people are just sitting long their stocks, and as long as the bull market goes up, they're happy. But during all this crazy volatility, Europe melting down with negative rates, failing banks, China having 3 banks go under already that were about the size as Lehman Brothers, trade war escalating. So there's a lot of reasons to be scared. There's negative debt around the world totaling $17 trillion. Think about that. Usually you buy bonds because you want safe income for a long period of time that will outperform inflation. But now we've entered this crazy world where people are buying bonds not because they want income, not because they want a safe place to put their money, not because they want to make their money outlast inflation. No, they're agreeing to actually pay money to have the right to loan these broke governments insane amounts of trillions of dollars. And it's escalating. It's accelerating. It's getting worse by the minute. And right now, America represents something like 95% of the positive yielding sovereign bonds in the world. Think about that. So people are not buying these bonds because they want income. They're not buying them because it's a safe place. They're buying them because they're betting they can flip the bonds for a quick profit. And that is absolute insanity. So again, there's a lot of risk in the market. I know it feels like you can just buy and hold and be safe, but this party is going to come to an abrupt ending when everyone does decide to pull off profits on these worthless bonds they've been buying, where they actually have to pay the government to lend them money. It's supposed to work the other way around. So I hope you'll consider upgrading. Get the full program. Call Dean at 505-322-7515. Let's look at the top news. Now I do want to point out that this document, if you click on the description box, you can gain access to this document, which is quite a lot of content. Today it has 49 pages. And so the first section is just all the charts I've collected. After that, we go into important clips I've collected from Twitter or from Zero Hedge or Bloomberg. And then we finish with the most important YouTube videos that you can watch, but I'll overview it for you. So let's start from the top. We'll go to the bottom, and then that will be a wrap for today's live stream. Okay, so these are the basket of stocks that I primarily focus on and base all our trades around. We have FXI representing the Chinese large cap. It's primarily their banks and their construction companies that are held in this ETF, but some exposure to companies like Alibaba and Tencent, some of their tech giants. GLD is our favorite gold ETF. HYG represents the high yield corporate debt. IWM is not a stock we're trading, but it does represent the what Stanley Druckenmiller uses to predict the future of the stock market. So he likes to look at the middle of the stock market to gauge its overall health instead of just focusing on the leaders who seem to have non-stop profits. And we're talking about Microsoft, Amazon, Google, Facebook, etc. So you get a different picture when you compare the Russell 2000 to something like the QQQ. Now, LQD is the investment grade bond ETF that people like Jeffrey Gundlach, who is called the Bond King, he's a billionaire from primarily trading the bond market, and he thinks that when this LQD tanks, that could signal the end of the bull market for equities, because a lot of the buying of equities are central banks that are allowed to buy equities, and there's a few big ones that can right now, not the US. And then there's the corporations buying back their own stocks, which they're doing not necessarily with the profits they generate, but instead with the almost free money they're getting out of the bond market. So they're taking out big loans to speculators who think these bond rates are going to keep going lower and lower, even into negative territory. And then they're, instead of using that to build their business, they're primarily using that money to buy their own stocks. And at the same time, we have the insiders of these companies starting to sell hundreds of millions of dollars of shares. So things are starting to look a little funny for a lot of reasons. NEM and GOLD are two specific mining companies that we like to play on our Thursday trade alert. So we're trying to play the bond market, watch these yields go lower and lower as they try to save the credit markets. And then we're taking some profits out of the call options on the TLT every Thursday. And we're buying a little position that's long and can generate outlandish profits from call options on NEM. So that's why I have that in here. Tuesday, we're currently playing the SLV ETF, and this is not part of our buy and hold precious metals portfolio. This is an income trade that can be used as an alternative to the SPY. So if you don't want to trade 3 times a week, Tuesday is our alternative trade alert that only trades once a week. And it's designed to use the caller to reduce potential profits, reduce potential losses, and try to generate a consistent income from the equities market. SPY is our primary trading device Monday, Wednesday, Friday, and again the TLT is our primary position on Thursday. Next, I have a basket of European stocks I track. There's a lot of focus on the US-China relationship in terms of predicting stock market. And of course, China has been the growth engine for the world for the past 3 decades, really, but especially the last decade. They gave us another boost in 2015 when everything was about to break down. And now they're running out of credit to be able to continue to give us more and more booms. Meanwhile, Europe has been slowing down, going into negative territory in interest rates. Banks like Deutsche Bank are on the verge of collapse. They're trying to fire everyone and save the company. But this is a bank that could cause financial systemic risk to the entire global market. So we're keeping a close eye on Deutsche Bank. Many analysts say that below 6 could create some major insolvencies. So that's something we're carefully watching. And of course, Germany is one of the key partners of China. So if Germany shows weakness, that can allude to big problems in terms of the global growth picture. So we're keeping a close eye on Germany. Here's my Chinese basket of stocks. And so this also is a good hint as to the tensions in the US-China trade war. And after that, I have a group of extra stocks. These are primarily the top positions in the SPY. And sometimes on Tuesday, we will play one or more of these stocks individually to try to outperform the SPY. And so that portfolio has indeed outperformed the SPY by a factor of about 2 to 1. So I'll take a look at that summary. So you can see the alternative equities portfolio, which is on Tuesday. In my portfolio, I've simply put about 12% of my total assets in this portfolio. But for some people, they're doing both, and some people are only doing one or the other. So that's totally up to you based on your lifestyle. But I do want to point out that this portfolio has a lot bigger swings to the upside and the downside. And when the market's trending, it will make more money, but when the market reverses trend, we can take a bigger hit until we adjust our strategy to follow the new trend. So in this portfolio, we had a negative 4% return in December, a crazy 7.5% in January. That's because the plunge protection team came in and was sending stocks rocketing higher. Then we had 3.5%, 3.9%, 1.5%, negative 1% in May, 6% in June, negative 1% in July, and so far 0.87% in August. Another stock I've added to this portfolio is GE. They are one of the biggest borrowers in the investment grade bond market. And the rumor is that if they were to go insolvent, it could cause the entire basket of BBB bonds to be re-rated, which could cause some major stresses in the credit markets. So Stanley Druckenmiller is a buyer of GE. He bought it on the news that the guy who exposed Bernie Madoff had found accounting fraud. And there's a lot of drama. We're paying close attention to it. No intentions to trade it, but I am looking for it to have a major sell-off to indicate trouble ahead. So far, it looks like this may be a lot of hoopla, just aggressive accounting practices by GE and not necessarily fraud, but we'll see how that develops. Okay, so here's our chart of FXI. This is a stock that when the SPY is traveling down, or there's reason for the SPY to travel down, we will not only flip the collar on our SPY trade, but on our Tuesday trade, we're buying put options on FXI. So I don't want to fight the overall equity trend when it's traveling higher, but when it is traveling lower, that's when I like to buy put options on FXI. And I think that this ETF can go much lower, probably down to $20 to $25 a share if the US-China trade war escalates. And if it gets really out of control, this ETF could simply be outlawed completely. And we have seen some ETFs blow up this year. So it's not common, but it is possible. And if you're owning put options on an ETF that goes to zero, you can make a ton of money with very little risk in terms of investment. GLD, I believe, has much higher to go because we can see what the central banks are doing. They're lowering rates all the way down to zero or negative, and they're printing money. And they've created a problem where the governments are hungry for all these promises they've made to their citizens. They have no choice. They can't tax enough money to pay their deficits. So instead of taxing it, they use the invisible tax, and they just buy their own debt from their own central bank. Now, because everyone's doing it, the dollar continues to climb higher, which is very bullish for all U.S. products, goods, from currencies to stocks. But the problem is this creates tremendous pressure on emerging markets and emerging market currencies. So this can cause trouble and eventually cause a major sell-off in global equities, which I do suspect will push even more money, at least in the short term, into U.S. Positions. So that's why we continue to be long the SPY, and overall are expecting the SPY to travel significantly higher, except for when we have bad news on the tariff front. And of course, the other caveat is once the recession of the world hits American markets, and we're actually seeing it in profits, we're actually seeing the CEOs go out and lower earnings forecasts, that's when we'll start to consider being more bearish on equities overall. HYG, this is the riskier debt. You can see it's not nearly as strong of a picture as LQD, the investment grade, which has just been straight up. And that's showing me that the credit market's getting near the top. And think about it, how low will America be able to drop its federal fund rate before people start predicting they won't go any lower? And is that going to cause everyone to try to take profits on these huge bond positions? So that's what I'm worried about. And if the Fed decides to actually manipulate the bond market and start buying up debt again, what's that going to do to the price of gold? So that's kind of where we're at. But we can see the riskier credit market is already starting to show signs of weakness. The Russell 2000 looking pretty bearishly sloped. And this is again what Stanley Druckenmiller uses to try to gauge the health of the S&P 500 and the Dow. Okay, LQD again is this critical credit market that is essentially fueling the S&P 500 higher. Without this, they wouldn't have the free money to buy back their own stocks at record pace. So this is probably the most important chart to keep a close eye on if you're long equities. NEM and another stock, GOLD, are the two largest cap gold mining companies. Owning the spot gold with GLD is great. That'll probably push up first. But if there's a belief that this trade war is going to last for a long time, then they got to think about where they can find more gold to support this huge demand that's growing by the day. So I like NEM, I like GOLD. Stanley Druckenmiller's long gold, not NEM. I'll be flipping call options back and forth every other week between those two large mining companies on our Thursday trade. So again, we're buying the TLT. We have an expectation that bond prices are going to push higher and higher. We can sell safe call options against it, buy the put option below, and then take that credit and try to multiply it by being long these two major gold companies. QQQ is just a fancier version of the SPY, kind of like the Ferrari of the SPY with all those key tech companies. So keeping an eye on that. Silver's our Tuesday play, and I think it's going much higher. We'll look at the 5-year chart of silver in a second. SPY, I believe, will push to new highs unless there's a few things that I'm worried about. So number one, we are raising tariffs on part of the $300 billion that's not affected by tariffs right now on September 1st. China has vowed to retaliate on the same date. At least that's what's expected. We don't know what they're going to do. So I may be a little protective of our bullish equities positions around that period. The bigger news is that the Fed is expected to lower rates and start hinting of QE at the next FOMC meeting, September 18th. So overall, I do want to be long stocks during this period of time, especially until we get back above 302. My only fear is that the stocks are extremely news sensitive right now to anything negative about the U.S.-China trade relationship. The big news this morning is that we have pushed the Huawei ban, allowing them not to do business with American companies, 90 days. So it would appear that there may be a period, at least to close out most of 2019, of relative ease in trade tensions. Now, of course, we're on high alert for anything negative to come out, so we can quickly predict down moves in the SPY. But for now, it would appear the coast is clear. We have one rough period around September 1st, and then December 15th when the next round of tariffs hit. That could be very negative. On the other hand, China really needs our agricultural products. I think Trump would agree to at least a truce in the trade war if they would simply buy farm goods. So on American side, they'd probably let Huawei keep doing business. And on the Chinese side, they would start buying farm goods. Now, if we don't see some farm goods being purchased in the next 30 to 60 days, I'm going to expect this trade war to really get out of control and start to recommend a bigger and bigger position in that gold and Bitcoin position. Now, I'm not ready to recommend altcoins right now. I think Bitcoin needs to hit something like 20K before the altcoins really start to rally. Kind of like how we expect spot gold to go up first and then the mining companies to come in after. I see the same relationship developing between Bitcoin and coins like Ethereum or Litecoin. Okay, TLT, I believe, has much higher to travel, especially if the trade war is either stuck where it is now or escalates. Now, if they really started to buy farm goods and all this pressure was taken out of the uncertainty of equities, I think the TLT could potentially have a sell-off. So that is one key thing we're watching is, will the Chinese buy farm goods? And if not, we can pretty much count on the current setup to do very well and start to get a little more bullish on gold than we are currently. EWY is the South Korean ETF index, clearly in a downtrend. This is a major hub for the semiconductors. A lot of electronics flow through here. So this is a great way to predict the future of the global stock market. And so right now, it's not looking so hot. We get this same setup where the rest of the world's deteriorating, so people are flooding into U.S. because it's still healthy in terms of profits. But if you study history, when the whole globe goes into a recession, the world's very interconnected. Eventually, it will start to show in the earnings of American companies. Here's gold's chart. I think it can go much higher if this continued drama escalates or even stays where it's at. If you look at oil, it's not looking healthy on that end. Now, the cheap oil prices does help with our view that the central banks can keep printing money. Cheap oil, no inflation. Central banks basically have a free pass to lower rates and print money. So that's very bullish for the stocks from that point of view. But from the point of view that global demand is not pushing the price of oil up, we can see that there's some unhealthy aspects out there. Now, here's a look at silver just to give us an idea of how high it could go based on the 2015 2016 scare. And this is when China was slowing down, and they gave us another 5 years of boost by essentially creating a huge amount of credit and doing massive infrastructure. But now China is really running out of cash rapidly. They're running out of credit. Their banks are failing. 3 have failed. Their car sales are plummeting. They're seeing inflation. So they're really in a tough spot. But the question is, how much pain will they take? And are they willing to take the pain until America finally crashes as well? Here's that conversion of US to Chinese currency. And it's at an all-time low in terms of how many dollars you can buy with one Chinese yuan. Here's a look at just the last month. So you can see they immediately reacted to the threat of tariffs, and then Trump said, just kidding, we're going to wait till December. So they kind of wreaked havoc on capital outflows for no reason, and then pushed it back down a little bit. So I'm sure that pissed off the Chinese a lot. Here's the German 10-year yield. This is what I'm using to predict the U.S. bond market. They can say whatever they want in their public speeches. The trend for the Fed has been to react after the fact to what other central banks are doing and to just keep our rates a little bit higher and our monetary policy a little bit better than what everyone else is doing. And now they're actually talking about creating a 50-year and a 100-year bond. So imagine America can go create this huge infrastructure bill to spend trillions of dollars and borrow all the money it needs at nearly 0% interest rate on bonds that last for 50 to 100 years. It's Trump's dream come true. He loves to borrow money and build real estate. And so that appears what they're going to manage to do at an extremely cheap interest rate. And so very interesting. If they do start to create a $1 trillion infrastructure project, that could boost all the GDP numbers and make this bull market and bubble go to levels that people can't even imagine. Here's that little rebound in the 10-year on the German. They just came out and said they're ready to spend $50 billion if they go into recession, which is nonsense that would push the yield up, because that's bad news. So that's interesting. And we've also seen at the exact same inflection point of the German yield bouncing up a little bit, we saw the TLT take a little hit because its yield bounced up a little bit. But I'm not worried. I think bonds are going much higher. The problems and solutions that we saw in 2015 and 2016 just can't be used from China this time. So maybe the only thing that could save the stock market would be a massive expenditure by the U.S. government, which at this point in time seems like Trump is happy to do. The Democrats are most likely happy to do as well, and we can borrow the money at close to 0% interest, and now they're creating this crazy 50 and 100-year bond. So great time for America to borrow money. If you remember, I was telling you guys, don't sell your Bitcoin. Buy up the Bitcoin. It was below 10,000. We had a nice bounce, selling at 10.7. I think Bitcoin is going to go to 20,000 before we see the altcoins really take off. And that's when I'll start saying, all right, let's take some profits out of the Bitcoin, start going long things like Ethereum, Ripple, Bitcoin Cash, Litecoin. I also like the BNB Binance coin. That one coin essentially is like buying an index of all the altcoins. So it's a lot less difficult to manage. And so this is exciting. Now, Bitcoin, the most intelligent thing I've heard about this, comparing gold to Bitcoin, you go spend a bunch of money to build a mining factory and you pull the gold out of the ground and then you put it in a vault. And at that point, there's really very little cost to maintain the value of that gold. Bitcoin's not like that. There's several $billion of electricity costs just to keep the Bitcoin network rolling. So it does have quite an expensive cost to provide its security and its ability to transfer so easily at any time. You can't do that with gold. So I do like owning both, and I think they definitely play different roles and have different pros and cons. But I'm not someone who only likes gold or only likes Bitcoin. I think it really makes sense to look at what the central banks are doing. If they're being foolish and they're trying to fund government deficits by printing money rather than using real tax dollars, it's pretty clear that you can bet on both gold and Bitcoin going up. Now, from there, if we see the gold price and the Bitcoin price getting too expensive, that's when I think we'll see the mining companies or the altcoins really explode to the upside. So keep a lookout for information on what we're doing with that on our Tuesday trade. Okay, now we're getting into some of the tweets I've collected, and we'll wrap up today's live stream. Stimulus bazooka on the horizon, that's Europe. They are apparently going to lower rates even further and buy up several $1 trillion worth of government debt to try to save their banking system, to try to fight off a recession and not let Europe break down. Brexit has really done a ton of damage to their economy as they continue to struggle to figure out how to work with each other. So on the other side, Hong Kong has had a hit to its GDP because of all the massive protesting. We've got people rallying up hundreds of thousands of people to now do bank runs on China. So the Chinese are getting furious. And this might be the big black swan that people are not paying enough attention to. Okay, here's a little note about the 30-year Treasury. Now they're talking about 50 and 100-year bonds, seeing if people would be interested in that. I'm sure they will. Fed Kashkari saying they should pull back on rates. This is pretty much expected. If we don't get a rate cut on the September 18th meeting, I would expect bond yields to rise dramatically, which means TLT crashes, and probably equity markets crashing as well, because they're expecting massive stimulus ahead. And in fact, gold would crash too. Think of 2018. If the central banks try to do the right thing, everything under the sun is going to crash. So I don't think they want to cause the pain yet. We know what they do to prevent it. They lower rates, they print money. Here's the global debt. U.S. stock market's worth something like $40 trillion. So total debt, which kind of represents what the total value of money is, how much credit is out there, is $246 trillion. Pretty insane to think about that. Especially when the yearly GDP of the United States is only $21 trillion. So there's 10 times the credit out there as the U.S. yearly GDP right now. So that just gives you a feeling for how much money could potentially flow into the stock market if everything lined up perfectly. Here's a look at the world stock market composition. So you can see U.S. has remained the biggest part of the stock market for quite some time. And I would expect the U.S. will quickly go back up to 50% or more the longer the trade war escalates. And that's simply because all of these countries have all their debt denominated in the dollar. Their currencies are losing value against the dollar, so it costs them more and more of their own dollars to pay off their own debt. So how are they paying off their debt? They're just printing more money, which further creates this tension where the dollar is stronger and stronger, even though we're lowering rates and creating deficits in the United States. If you just looked at what the United States was doing and didn't pay attention to the rest of the world, the dollar should be crashing, which is what you get from like Ray Dalio predicting something like a 20 to 30% crash. But he's also a huge benefactor of China. He's one of the few people who can manage Chinese money. And he's a doom and gloomer. That's how he attracts his clients. Here's the 2,000 years of history. So you can see that dynasties come and go. Now, it's interesting to see China dominated for so long, had 100 years of embarrassment, is what they call it, and now they're starting to take off. But the question is, are they really that great of an economic model, or are they more of a parasite that has a closed system that's taking advantage of the world? And what's going to happen when we cut them off and make them play by the rules? My expectation is that the democracies with legit legal systems will flourish, and that closed systems like China are going to be punished. So we'll see how that all plays out, but this is an interesting chart. Chinese Foreign Ministry spokeswoman, we have noted reports the U.S. have backed the sale of F-16 jets to Taiwan, urges the cancellation of the U.S. arms sales to Taiwan. U.S. will bear the consequences of the sale. So we have Taiwan and Hong Kong revolting against China. China's whole goal right now, from what I can tell, is essentially to decouple with the U.S. with as little pain as they can take, and then try to gain control of the Eurasia area. And if they can do that with their Belt and Road Initiative, and they can gain control of all these little countries around them, they can be a very successful closed communist system where they can control everything, and they won't be so reliant on America. So I think that is very well what may happen and what the Chinese want to happen. And this would force the U.S. to essentially rebuild a lot of its manufacturing and take advantage of South America. So we could see a very polarized world where you have the East dominated by China, and then you have the West dominated by the U.S., where that's where this seems to be trending currently. This is why stocks are up so much today. He wasn't sure what he would do yesterday. If he'd said that they're going to ban Huawei, we would have been glad we had our put options, and stocks would probably be down today. But I was expecting that, at least on the U.S. side, we told them what we're going to do. We made the threat of tariffs. And now it's really a waiting game for the Chinese to retaliate. Here's the little note about Germany preparing stimulus, which caused a little bit of drop in the yield. Wilbur Ross says that the recession will happen eventually, but the yield curve is not as reliable as people think. He's a very smart investor. Hong Kong, you can see all the people with the umbrellas. That's been something that the Chinese and Asian folks have done for protests. So you can see from a overview, I think it actually was raining that day. You can see they're all getting out of the way for the fire truck. This has been going on for something like 6 weeks now. It's not coming to an end. Hong Kong does not want to be able to have their bank accounts frozen by the Chinese or to be extradited to China. And that's what the Chinese agreed to when they took over from the British. Okay, now this is an important change of dialogue from Trump. And this is showing me that things are really escalating, even though it seems like we're in this cooling off period. And mentioning the word Tiananmen Square is a huge no-no for China relative to public relations. So for Trump to throw this out would be held extremely offensively by President Xi of China. And he says, I think it'd be very hard, and this was just Sunday, and the YouTube clip below, you can listen to the exact video. I think it'd be very hard to deal if they do violence. I mean, if it's another Tiananmen Square, Trump told reporters in New Jersey, I think it's a very hard thing to do if there's violence. So Tiananmen Square is where the Chinese reportedly, and they've been trying to censor this from their own people, censor it from the world, really, but they had college kids wanting a constitution, wanting to have a democracy, and having a several-week-long protest that ended with bloodshed. Rumors are that 50,000 Chinese were killed during this, and it's been a big cover-up. China's biggest, darkest secret. So for Trump to start bringing that into U.S. media could really spark some aggravation. Japan's exports to China shrank 9%, showing Chinese economy is hurting. They may be okay with this, though. They may just want to take over the Eurasia territory and cut ties with America. They don't want to give up all their economic advantages. They don't want to change the way they do business. The Communist Party certainly doesn't want to give up their power. That's really what Americans are asking. So this could most likely just decouple, and that's that. We'll see. Wilbur Ross has a good interview on Fox that I recommend watching. His highlights were that we have a huge list of bans ready for Huawei. He's got something like 40 entities blocked and 120 different different little mini segments that could be used to try to get around our sanctions. So he is one keen hawk and is ready to put the pain on Huawei. Also was talking about why they pushed the tariffs on some electronics to get out of the Christmas season. And those were the two biggest takeaways I had on that. Here's a Sunday interview from Trump. We keep getting all these little 15, 20-minute clips of him at the airport where we get the best insights as to what the economic, or rather the White House's policy is going to be in the near future. And like I said, it looks like we've taken the pressure off in terms of short-term pain on China. They know what the plan is, and now we're just waiting for the Chinese to retaliate, and that's when I think we're going to have the next scare in stocks. Larry Kudlow talks about how strong the economy was. I think this was in Saturday morning. Good interview. Very bullish message in terms of that. But he also says he thinks the tariffs will go up December 15th and is a little bit skeptical of a U.S.-China trade deal. This is an interesting video. What I want you to pay attention to is how quickly we went from 12 trillion in negative debt around the world to 16 trillion. This is not a slow growth. This is getting out of control. And again, this is where people have to pay money to lend their capital to governments who are not able to pay for their deficits with tax dollars, so they're having to borrow money. So this is complete insanity. You can see this is spiraling out of control. Everything seems calm right now, but the second the bond market snaps, there could be some major pain. Luckily, we think we know what the central banks will do, which is just inflate the monetary supply. So we have a good idea that we're in the middle of a bubble where everything could potentially go up depending on the news and the trade war. This is a great interview that really outlines why China is quite likely to just break ties with U.S., try to dominate the Eurasia area with their Belt and Road, take over control of all the surrounding territory, including Hong Kong, Taiwan, Vietnam, all these little countries around them. And they can have a great flourishing system. It also talks about how the Chinese growth story is really more of them taking advantage of an open system while having a closed system. And now that the open system is cutting them off, I think they're going to have some stagnation ahead. And he talks about why the U.S. will most likely move its manufacturing to South America. So it all makes sense. We'll see if it plays out. This video is called China Uncensored. This guy just focuses on the drama of China and currently been doing daily videos on what's going on in Hong Kong. So this will be our best alert to trouble with the Hong Kong situation or Taiwan. You watch this daily. Good little clip. And so that's a wrap. If you are impressed with all the content and all the market predictions, you want to take our safe income trades, call Dean 505-322-7515. We have a live webinar Thursday for free trials and expired members, and our paid membership gets an exclusive members-only webinar this Wednesday. So thanks again for your time. New trade alert tomorrow. It's only for our paid folks, so if you're on a free trial that's expired or an active free trial, and you don't want to miss out on tomorrow's trade, call Dean 505-322-7515.